let's talk about one of the topics you guys love chatting about because I'm fascinated by Bitcoin, right? I have an economics degree and just the whole, you know, printing of money, the stuff that's going on. I'm just fascinated by Bitcoin and I'm just consuming information. And I know you guys are active in the Bitcoin world. Tell me how you get involved in Bitcoin and how's it going and what kind of you see as the future for Bitcoin.
Yeah, look, there's a lot of people that are smarter than me in that space for sure. But we've done a lot of reading, and we've been fortunate through the podcast to speak to a lot of people that have spent a lot of time in the space as well and learning from them. So I think for us, we dismissed it early on. First of all, Bitcoin to us is very different. Some people will say crypto, and I think Bitcoin kind of stands alone in the crypto world. Not that crypto is good or bad or anything about that, but it is a little bit different just because of the way it's truly decentralized. A lot of the other ones claim to be decentralized, but they're not so much, right? So that's one of the big things that we learned early on, and we dismissed it. We liked the technology, but we kind of dismissed Bitcoin as a form of value or as a form of money early on. And it was when COVID hit that we had time to dive into it deeper. So what was it? That was 2020. So that was just over a couple years ago. And we dove deeper, and that's when we started buying. And we were fortunate because at that time it was at a down cycle, and we started buying at a pretty decent price, and it's worked out very well as a store of value for us, even with the volatility that exists in the new asset class. But it's hard to. We were old school gold guys, right? So like yourself, when you understand that when 2008 the financial crisis hit, we were just like, what the hell just happened? What is this? Like, why did everything just blow up? What's going on here? And we were down at a mastermind meeting in the U.S. and some of the guys there that were investors, we had never seen such fear on their face. This is when this was in the end of 2008 when what was it, Bear Stearns just was collapsing, but maybe it was just before when that type of stuff was happening. And we're just like, what is going on with these guys? They're all kind of fearful. So we decided to kind of drill down into the money system a little bit more. We read books like The Creature of Jekyll Island, which was a big one for us. Then we started, Currency Wars was later. What was it? The Guide to Gold and Silver by Mike Maloney was a good one. There's a couple other ones that we kind of went down and we started kind of understanding just historical money and history and the money system that we're involved in. And that's when we started looking at inflation and we started looking at debt levels, and we're just like, oh my God, this is nuts. Like once we started understanding that. So that kind of turned us into a little bit of like gold guys, a store of value guys. And then we started believing in real estate even more because we liked real estate before, but then understanding the fundamentals behind it about just the debt levels and if they're going to inflate things, these hard assets like real estate and how they would perform, in our opinion, we believed in them even more. So it became even more interesting to us. So with that as a background, when we finally came around Bitcoin and got a greater understanding of it, we're like, hold on, is this thing going to hold value? And is there money from the systems going to go into this money? Because historically humans have always kind of like moved over to the hardest form of money. And that's there's a good history lessons on money from the Bitcoin Standard, which is more a book about historical money than Bitcoin. You're nodding. I guess you've read it by Safe.
Yeah, I've read it. Yeah.
Yeah. So like the first, 100 pages or the first half of that book or so, it's all about just money and historic money. And it just kind of makes you think. So then when we looked at that and we said, well, this thing, if it's kind of like some principles of gold, because but there's a limit to it. And then you can send it very easily and you can store it yourself. And we started getting these kind of like basic principles behind it. We're like, holy cow, there might be something here. So we've definitely gone down that rabbit hole in a big way, but it's been a valuable rabbit hole, I feel, to have gone down. And I really think that it's going to serve ourselves, our families, the people that we've been able to share it with in the future. And we're long-term investors. I guess that's something everyone should know. And I think you have a similar approach. Like, things go up and down, and that's fine. But we're old school. We're not flashy. I can't jump on. I'm the worst stock trader in the world. Like I can tell you, I am the best person at buying high and selling low. Emotions get involved. Like I suck. But if I can park money and let it sit there and kind of do something for me, that's why real estate serves me well. That's why things like your products serve me well, and those types of life insurance products when we've done things like that. That's why if I just let this Bitcoin sit there, I think in the long term it's going to be really valuable because I think there's there's a migration to kind of a over to that type of space. That a lot of things are happening there.